And we now move on to the fallout of the Hindenburg researchers' claims against Gautam Adani. There's a huge development here. Just a few moments ago, India's financial market regulator, SEBI, said it is undertaking a full-scale examination into the falling value of Adani shares. As per Reuters in the morning, it seemed that Adani had recovered some investor confidence after his flagship firm's share sale weathered the Hindenburg allegation storm. The Adani Group firm stock was recouping losses on bourses until yesterday. Adani firm's shares had lost $65 billion in market value. Adani's personal wealth had dropped by at least $34 billion. But the Adani Group's shares were recovering today. They had an upward run for 2 successive sessions. But that was until Credit Suisse, an influential global brokerage firm, had dropped a bombshell. Credit Suisse would no longer accept Adani bonds as collateral for marginal loans. The Swiss banker has assigned a zero lending value for the notes issued by the Adani firms. Adani's dollar bonds have reversed their earlier gains. Bloomberg estimated that Adani Group's losses have now swelled to a whopping $92 billion.
Adani's empire is in the middle of an ominous storm. The rout started last week after Hindenburg's report. It accused Adani companies of brazen stock manipulation. It said Adani did so by creating a network of shell companies in tax havens. Adani has called those charges baseless. But not everyone thinks that way. Not Credit Suisse, for sure. It is an influential name in the global financial world. Credit Suisse has now stopped accepting Adani bonds as collateral. What does this mean? For starters, Credit Suisse has taken Hindenburg's charges against Adani seriously. Clients looking to borrow from Credit Suisse will have to provide other collateral. Otherwise, the clients would risk liquidating their securities. Adani firms have been hit hard by the Swiss lender's decision. All the 10 listed companies backed by Adani Group closed near their lower market limits. And by how much did the Adani Group shares crash today? Adani Enterprises dropped by 30%, Adani Ports and ZIS by 25%, ACC Limited by 9%, Adani Green Energy by almost 8%, Adani Power by 5%, Adani Total Gas by 20%, Ambuja Cement by 19%, Adani Transmission by 9%, Adani Wilmar by 5%. The crash in Adani Scripps comes a day after its $2.5 billion FPO was fully subscribed. However, there is a catch there. The FPO managed to sail through because of support from high net worth individuals. The institutional investors also salvaged the FPO. Most of the retail investors stayed away from it. Who would have thought that Adani, who was once Asia's richest man, would face a fate that befell upon him? Another fallout of Credit Suisse's decision, Adani is no longer India's richest man, and he is not in the top 10 list of the world's wealthiest billionaires list either. Mukesh Ambani is now richer than Adani.
WION now available in your country. Download the app now. Get all the news on the move.